Manager Warren Ingram, Director at Galileo Capital, a financial advisor. This time last year, Warren Ingram, I was winging my way across the Atlantic Ocean to Middle America to the annual general meeting of Berkshire Hathaway, textile company turned investment holding company of the world's most successful investor, Warren Buffett. I would have thought that you would have been there queuing at the big arena 3 days ago already to make sure that you get the front row seat, and you're not going. I'm disappointed in you.
I'm also disappointed. I feel every year I should go because it might be his last. Just statistically, the probability is he's not around for decades more. But they have innovated. So they do live stream now the meeting, and you can listen to the entire thing from start to finish. And I find it very hard then to justify, getting on a plane and flying to the middle of America, which, as you know, is a heck of a flight.
It's a hell of a flight. Yes.
And so I'll just be up at odd hours watching the streaming version of it and listening to all the questions and reminiscing, I guess, about the town.
But is there more to be gained by going and getting the vibe and pushing and jockeying for position with the other Buffettologists? I don't know. What do you members of the cult call themselves? What do you call yourselves?
The Buffans.
The Buffans. Oh, Buffans is a good one. But do you find it's different? I mean, do you get as much? Do you extract as much by sitting in your pajamas at home, watching it on your laptop as you would, being properly prepared and being there in person?
I think that is a great point. So, for me, especially when you go from South Africa, there ends up being quite a nice group of investors, entrepreneurs, business owners, and then one or two well-known media personalities, that end up going there, and so you get to interact with them, and very often you get a lot of value from people. Some people like Koki Kwemen have been going for decades, literally decades, and so the insights that you gain from them leading up to the day, are invaluable, because he'll be saying, look for this in the talk, and if this is what Buffett is saying, this is what you can read behind it, and if he goes the other way, this is what you can read into it, and so that is extremely valuable.
It's like trying to decipher what the US Fed is saying about interest rates on any given week. But yeah, Buffett and Munger, they're two old toppies. Munger is older; he's 94 this year. Buffett he's heading towards 90.
Yeah, and I mean that's blowing out the retirement age, mandatory retirement age at a lot of big businesses. If they say you're not capable of working, your answer should just be, well, hang on,
Buffett and Munger are.
Yeah, they seem fine. They're not doing a bad job.
Now, every year, Warren Buffett, a week or two ahead of the annual general meeting, which is the big event we're referring to, which happens in Omaha, in Nebraska, which is like Bloemfontein without the charm. Omaha, it's not the world's most exciting town. I don't understand how the world's richest man has lived there that long. There really isn't too much to do. Maybe that was the secret of his success. But here he releases a letter every year, about 20 pages long, and in there is the wisdom of 12 months worth of investing prowess, positive and negative. He's quite self-effacing. Did you learn anything brand new out of this year's letter?
What's very interesting to me is he's definitely in the last few years moved away from the original type of meetings where there were a lot of ideas and talking about individual shares, individual companies, and about stock market investing in detail. And he's definitely zoomed way out of that. So a lot more about principles of business, principles that people should use and should follow. And to me, that was, that's been very interesting to watch as time has gone on. And I can only think it's because he employs two full-time fund managers who are managing, really big chunks of money now and within Berkshire. And he's probably loath to talk about their individual picks because, he's going to take their ideas away. And so I think, he's focused a lot more on principles in general. And what's interesting is I think he's giving a lot more advice to individual investors now about principle than ever before. So I think in the beginning, in the early days, you could go to those meetings and kind of get a mini MBA on how to invest in a share. Now it's about how to invest in general and fiscal discipline and the like.
Does it have any value then? Because, surely not anybody, but there are many more people in the world who can do what Buffett is doing nowadays than doing what Buffett did 5-10 years ago.
No, that's what I can't see. And I think I don't know how to describe it, but so
it's a rapture. I mean,
but well, I guess it's like saying you can go to your local if you want to learn to play golf, you can go to the local golf pro around the corner, who teaches everybody in 30-minute slots, and and he's learned it from a textbook, and he's won no major tournaments, but he's there, and he
okay, all right,
parrot
okay,
it.
I've got you.
And you can get it from Tiger Woods, and who's won everything. And maybe he hasn't won a tournament in the last year or three, but he's Tiger Woods and he's dominated the world. And why wouldn't you want to learn more from that?
Okay, I've got you. So Warren Buffett is the
Please
Tiger.
don't question Buffett again.
Don't ever dare second guess His Holiness the Buffett. Now, one of the things he says, and it's quite interesting because he's long stated his preference for his widow one day when he does depart this mortal coil, for her 90% of the money that she inherits from him to go into the S&P 500 and 10% into more actively managed investments. But his big point is that it's simply risky to bet against markets, which feeds very nicely into the idea of index funds, because markets have outperformed Berkshire Hathaway for most of the last 10 years, probably.
100%, and I think just quickly on what he's doing with his wife, it's 90% in the index, the S&P 500, and 10% in cash or near cash.
So
he's actually gone completely against active management, which is obviously ironic in that that's what Berkshire's all about. But he has said that for a long time. There are very few people that have the ability to consistently make long-term rational investment decisions buying shares. And if you're not prepared to do the homework, then and you're not and you maybe don't have the depth of knowledge, then just buy the index. And it's interesting. I looked at the first 43 years of Berkshire Hathaway's life. So that's I think it's 65 to 2008. And in that time, he outperformed the index by 184 times. I have to write it down to actually look at that. So if you put in $100 in the index, you got good money back. But if you put $100 with Berkshire, you got 184 times more than the index. So to count against him in that instance, I think it wouldn't make sense. But there is a time, and I think it's pretty much been the last 10 years where he has underperformed the index. And to me, this provides so many great lessons actually at the same time. So the one is, if you're going to be an index investor, just understand that there will be times when great asset managers do outperform the index, and in that instance, you can lose out quite significantly if you happen to miss some of the very best managers, a la Buffett in those first 43 years. And it's far too long to say that was luck. 43 years. I don't care how many times people.
That's not a bad track record.
Yeah, that's good. But the flip side of that is that if you don't have the access to that great fund manager, or you don't know how to choose those great managers, then being in the index is really not a bad deal.
Fees are important. Understanding real risks with investments. Here's the critical one, though, to me. Make fewer decisions, which is so counterintuitive. We kind of assume that the people who do well in stock markets are sitting on their smartphones and they're multitasking on their laptops, and they've got a stockbroker on 3 different telephones from 3 different stock brokerages, and they are trading and they're making nano bits of money every second and are flying high. And Buffett just says, no, don't do that.
So he's kind of famously said that you should try to make 5 investment decisions in your lifetime. And so just to quantify, to explain that further, that means, a decision to buy something or a decision to sell something. And he's saying make 5 in your entire lifetime. And so, I mean, that's to me simply not practical in this day and age when there's things like tax-free savings and RAs, et cetera, et cetera. You need to be tax sensitive in your investment decisions as well. But you can take a lot from that. And I think one of the big decisions there is once you've made an investment call and you've decided to put money into your investments. And my view is, I think learning from the Berkshire experience is, you could do a lot worse than going half index, half into an active manager. And if you do that, don't chop and change either the index or the active managers simply because they're going through a patch of underperformance. Rather stick to that strategy and let it ride out, because you might be really right with your index call for 6 or 7 years. But when that turns, and I think that might happen to Berkshire now, when the market cycle turns in favor of a manager like Berkshire, where suddenly, their investments are highly recognized and the index investments, drop quite substantially, then having a combination of the two would really work. So I would say don't change your investments simply because of underperformance. You need to be really careful before you do that. Change them if your manager resigns, or your whole team walks out, or something like that, or your personal circumstances change. That makes sense to me. That's a great time to review your investment decisions, but not because of underperformance. I mean, I think we spoke about it, a few times through this year. The markets don't always give you the best returns, month to month or year to year, but that underperformance does get rewarded, or I guess the periods of underperformance do get paid back to you when markets turn and go strong.
Now, last point, be careful of past performance. And all of these adverts in the financial services sector saying past performance is no guarantee of future performance. T's and C's apply. And you kind of don't think about that particular statement. But it's such a critical statement that Warren Buffett makes.
And I think if you look at just look in the world at the moment, there's a style of management called value managers, and they have underperformed the other styles of asset management and their respective indices for quite a few years, up until 10 years. And Berkshire's a great example of that. But that doesn't mean, and I think we're going to see it in the next little while when interest rates start going up in America even more, that we'll see value managers kick into play again. And if you'd just invested on or avoided value managers or sold out of your value manager because of that past performance, you could have just made a really terrible decision.
Thank you, Warren Ingram. What time does the South African time? What time does the big show and tell story? Oh, you don't know?
But it's quite late South African time, I think.
Yeah, I mean, I'm trying to recall. I mean,
you were there a year ago.
I was there a year ago, but it was so traumatic. The flight was so long. You land 26 hours after leaving, yet it's only 3 hours later than when you left, and your body doesn't know which way is up. I just remember driving in the dark and standing in the dark. I
can't believe your private jet took such a long time.
Yeah, the pilot got lost. You had to fire him. But yeah, it took an awfully long time. And yeah, it was kind of 9 o'clock in the morning Omaha time, which is late in the afternoon. So it's an evening event on Saturday, South Africa time. And you just go to BerkshireHathaway.com and you can stream for nothing the wisdom for 6 hours of Charlie Munger and Warren Buffett. Warren Ingram, we know what he's doing on his Saturday afternoon. Thanks, Warren.